Good afternoon. First, let me thank IIBI and ISRA for having me, and thank you for coming. I'm going to take a little different approach. I've been asked to look at the lawyer's role in transactionally, the lawyer's role in Shari'ah governance. The case study is the Dow Jones fatwa and the principles that were set forth in that fatwa, and to kind of trace how some of those evolved from 1998 to the present. The idea here is to try and consider the lawyer's role at each step. You will notice as we do this that I don't mention the word moral at any point. There are numerous instances where there are moral judgments to be made as this evolves. I presume everyone's familiar with the Dow Jones fatwa. There were basically three tests, two levels of tests. We're going to look at the second aspect of level 2. So I'm going to consider the Dow Jones fatwa from 1998 onwards. And as you may know, this fatwa took 5 years to obtain. Dow Jones submitted it in 1993. It was eventually granted in 1998. And of course, it was granted to one institution, Dow Jones. But the tests set forth in this fatwa have taken on much broader application. And we're going to look at primarily at two of the types of tests. Going to Neil's point, and Habib and everybody, I totally agree that you should, at the constitutional level of an entity, incorporate the relevant principles. The fact of the matter, though, is transactionally, the work is done by the lawyers and the accountants and the people at the ground level. So it's not only a top-down, but very much a bottom-up. And sadly to say, when you get into the transaction, frequently only the lawyers know what's going on. When you get into the documentation, it's their responsibility to report on risks and principles and whatnot. And I don't think we've done a very good job of training at those levels, the bottom-up levels, to take it up to the scholars and to the management. I just want you to think about that as we go along. So some of the responsibilities of the lawyers. A lot of these slides I'll kind of blow through. I don't know if you can read this, but this is kind of through last few days and today. I think of this frequently. It says that we've agreed to count it as both a wave and a particle for tax purposes. And if you remember your physics, of course, we're talking about light. There are lots of applications of this particular principle and how we consider Islamic financing. All right. Prior to 1998, basically, nobody could buy an equity security if you applied the tests absolutely. Because virtually every company paid or received interest or engaged, to a lesser extent, engaged in some prohibited activity. But just the interest, investments, borrowing, debt, whatnot, would preclude you. So the context was here, non-controlling interests and equity investments. Dow Jones' specific question, of course, was indices. But the principles have since been applied to the making of equity and debt investments in all kinds of transactions. We'll leave private equity to the end if we have time. So we're talking about equity investing and equity indices. Sorry about that. The question, I guess, is this. Can you accept a degree of impurity or variance, however you're going to classify it? And this fatwa did very consciously accept some degree of permissible variance or permissible impurity in a number of areas. And it set forth some tests. Mostly, it accepted them with respect to the amount of interest that an entity could pay or receive. It focused on paying and receiving through a series of 3 tests. It also, very importantly, institutionalized, and it didn't invent these tests, clearly. The people been in the industry a long time, but it did institutionalize the tests. Are the core business tests. Think of a conglomerate. General Motors. Could you buy a General Motors stock? They own a credit company, that's primarily used to finance, well, it's extended well beyond that since. But at that time, that was primarily intended to finance purchase of vehicles made by GM. Okay, so here are the tests. The ones we'll focus on are in the red, the core business test, and the degree of permissible interest, income and expense. Now the context is 1998. Here are the specific tests. Accounts receivable test, the total debt test, and the sum of cash, basically cash and cash equivalents tests. Those are the original figures. One of the evolutionary developments in Islamic finance was a change of these tests. And they had reasons, which we won't go into, for using the market cap rather than total assets. And as you can imagine, just think what's happened between 1998 and now, .com, changes in interest rate. One day you could own the stock, one day you couldn't. Nothing fundamental changed about the company. Whole market shifts were pretty influential and chaotic. Fortunately, there are lots of protections. One is the trailing 12-month average. There are others. They require continuing periodic review to address mergers and acquisitions, all that sort of thing. This is just a flow chart. I presumed kind of that these slides would be, everybody's would be given out. So some of these things that I skipped, you can look at them when you get them. The important factor in a way is in 1990, EDGAR, the electronic data gathering and reporting system in the United States, was only implemented in 1996. And it wasn't completely implemented by that time. The point is, and that was the first reporting system that allowed you to get more than balance sheet information. Now you can get operating statement information on most companies. But put yourself in the context of the scholars considering this. In 1993, what you got is balance sheets. So if you're going to develop tests, they're going to be developed on the basis of balance sheet information, which is what happened, in fact. The first adjustment, the first line of adjustment was to shrink the permissible variance, constrain it, less variance, which is a principle that was set forth all over in the fatwa. I think 4 or 5, 6 times it's repeated. That you've got to make this more restrictive over time. And that happened. Accounts receivable went from 45 to 33. That's one example. Then, a bit later, I forget the year exactly, somebody might remember, AOFI 21 came along, which was another sort of variance, and it expanded the coverage a little bit to acquisitions, investments, and trading. Shrunk it, a minor amount to 30%, but and moved to a total debt denominator. So evolutionary change, and you can kind of think about the effect that that might have. And of course, it accepted the 5% limit that had been around for some time. It also said the manner in which you generate that prohibited income is important. Dow Jones didn't address that. All of these things happened in a transactional context. Doing deals, you had to think about this. And lawyers, financiers, and people evolved this process during that period. And of course, the cleansing and purification, which was also part of the fatwa, and pre-existed. It wasn't invented for that purpose, but you had to give away the income. All right, then what happened? Then you got hybrids, that you make your own decision as to what happens here. 3 classes of revenue in the second set of tests, and the results, the figures, the percentages are a little different. Well, this is quite a big change. And I have no value commentary on this sort of thing. It's just an evolutionary process as these tests were applied in different contexts. So, the source of the revenue, the type of revenue, and how opprobrious it was thought to be. What happened next? We got operating statement information. And what's total debt to market cap or total debt to assets? It's a guess, about how much interest there is based on a balance sheet measure. When you could get operating statement information, you can tell exactly. Now you can see the operating statement. You know exactly how much prohibited interest expense or prohibited interest income there is. That's approximately 2003. Now you can start to change the tests, and they became more restrictive in most cases. Not all, because the scholars don't agree on the percentages. Whereas the Dow Jones was based on a hadith, the third being a great deal, that was not true for the operating statement tests. They become much more restrictive on the whole, but not always, and people struggle. So generally you're looking at an interest income plus interest expense to some measure of total, to gross revenue, or those individual components, I'm sorry. Non-equity context, what happened with the principles from this fatwa? As you all know, if you are Sharia compliant landlord, as a Muslim landlord, you rent your property, the tenant in your property has to be in a permissible business. So, some of the first questions, if you buy a commercial office building, can you rent, this is the first one I worked on at any rate, can you have a Citibank ATM on the first floor? And then it evolved, all right, supermarkets that sell pork. I mean, the myriad of possibilities, and if we have time, I'll discuss one that I find particularly difficult, which is the last one, the microbrewery situation. We bought a series of 11 buildings in one transaction that couldn't be split. There were only 3 restaurants in those 11 buildings. One of them was a microbrewery. Can you acquire that building? Very, very difficult set of issues. It resulted in a series of traffic studies to see how far people could go for lunch. This is an interesting difference, we were talking about this the other day, between Americans and English. Americans don't drink at lunch, which is fascinating. So it totally changes the revenue profile of an institution like that. It's basically a restaurant that makes beer and sells it to other distributors. Doesn't help a great deal, but it's an interesting. So you look at factors. These are the types of factors we've had to consider in applying the Dow Jones tests to tenants and buildings. I mean, all kinds of things. So, I probably deal with this, as do many other lawyers who do this kind of work, 4 days a week, some issue in this realm. How about principles that were not set forth? How much time do you think? Okay. What do you do with, and we discussed this some over the last 3 days. The fact of the matter is that when you're buying a building, most of the tenants have leases. You're buying usually an occupied building. Most of the tenants will have leases that are not Sharia compliant. That's the market. And the main provisions that are offensive are the triple net leasing, maintenance, insurance, the triple net leasing provisions, and late payment. Late payment is fairly easy to address. You can donate it to charity. The others are more difficult because the market is clearly not Sharia compliant. So what do? Well, the scholars have said, all right, you can acquire that building. You should go ask them to change it. If it's going to cost a great deal of money, we don't want the transaction burdened with the extra cost, so go ahead, buy the building. But when that lease comes up for non-mandatory renewal, you got to make the lease Sharia compliant. The same principle has applied to tenants. If they allow you to have a non-compliant tenant, you're going to have to boot the tenant out in the normal case when that lease ends. These are accommodations at the front line, day to day. And you deal with this stuff literally every day. Project financing. The single Islamic tranche, very quickly. You hear a lot about it, particularly in the Middle East. Is it Sharia compliant? Is it pure? Of course not. Basically the issues, and usually what you do is you lease part of the assets for the Sharia compliant side of the financing. the rest of the assets are conventionally financed. Well, this is an integrated operating whole. You can, as a realistic matter, you can never realize on one's part of that deal or the other independently of foreclosure on the whole. We've spent a lot of time in the last 3 days batting these ideas around. The fact of the matter is you're going to share collateral if there's a problem. Now, the first transaction in Qatar, the way they handled it is said, okay, you can foreclose on our assets, but you can only use the proceeds of foreclosure to pay principal, not interest, on the conventional side. One wonders. At any rate, there are huge issues on this at the front line. Intercreditor. Who gets to move first? Who gets to control the remedies process? The realization processes, all that sort of thing. This is just a structural diagram basically to show you that you're splitting that collateral no matter how you do it. If it's separate buildings, maybe, but even then, usually the storage facilities from an oil production facility you think are not integrated. Of course they're integrated. You really can't break these things up. All right, I'm going to kind of skip through the rest of this and just go to the conclusion. By the way, I should say in private equity, very, very briefly, it's an interesting differential here. Because in private equity, you know exactly how much you get to, in your due diligence, you're going to know exactly how much interest income and interest expense there is. So it's much easier to get full information. Frequently, and this has been the trend, particularly in the US and to a lesser extent in Europe, it's more difficult to do private equity in Europe because of some secular laws. But the trend has been to acquiring entities with a lot of debt, great deal more than any of the tests would allow. And then the focus shifts to how do you recapitalize and reconfigure this entity after you've acquired it. Because now you're a controlling shareholder, it must be totally Shari'ah compliant. You have no variance. Well, how long do you get? What are the steps to doing it? And some of the recent private equity deals, we've spent literally years unwinding that capital structure, reconstructing the capital stack, and trying to make the whole transaction Shari'ah compliant. All right, basically, let me close here and just say, my perspective as a transactional lawyer is the world's dominated by conventional finance. We have to interact in a system that's dominated by conventional financing. On any big transaction, we can't do it alone. You can't do a big petrochemical project without conventional financing in the transaction. They're too big. The risk concentration for a bank is just too great. The legal principles that we deal with, as you well know, are secular principles that are basically premised on an interest-based system. So, however much we want to change quickly, it's difficult. But we have to. And what we've talked about the last 3 days is, how do you do that? When? When do you start to demand that? What are the steps? I tend to be less radical. You know, I'm out there on transactions, and I don't think you can change these things overnight. You can change them. I think one of the biggest factors, do a couple deals with a conventional bank and then ask the bank. You know who the largest Islamic financier in the US is? ING. Now isn't this interesting? The first ones, they're terrified, and you're in a terrible negotiating position. Strategically, we just give them everything. After a couple deals, we say to them, what do you think? Is this all that scary? And you know, this is leasing. There are some differences in principles. But you will see return, and you have to get the conventional world comfortable, and they will move to you. One of the banks involved in these transactions has agreed that instead of making, in these bifurcated structures where they make interest-bearing loans, that they would do away with that and let us sell them the sukuk. There's no difference to them, really. There are a few principles that are different, and we had to work through that. But they'll buy the whole sukuk, and they'll syndicate their interest in the sukuk out. Well, this is a huge step. They are agreeing to do an entirely Sharia-compliant deal. in the United States and here in England, same thing. One or two final comments, I guess. Standardization, there are a lot of ramifications for all this. We talk about standardization all the time. We usually talk about the benefits, and there are lots of benefits, particularly in repetitive transactions. The problem in our industry, and when people come to me and say, oh, we should standardize this, or I hear bankers in particular, you can't standardize things until the risk allocations have been agreed upon. All the parties know what their risk position is, and they've all agreed on that allocation of risk. I don't think that you can standardize certainly routine transactions, but still you need that. In more complex, you can standardize parts of them. It gets more difficult to standardize it all. We aren't there, in my view. Secondly, I don't think underprivileged, poor people, consumers, and whatnot have been adequately represented in the process in this industry or in any other industry. And we've standardized, I think, if 2007 financial crisis, the global financial crisis illustrates anything, is that a lot of people had no bargaining position and got taken care of, just devastated on standardized procedures that didn't consider their interests at all. So I hope if we move toward that, we don't move to it until, particularly in the retail sector, it's not as big a problem when two big institutions are dealing with one another. It's equal bargaining power. So, what can we do? I think it is imperative that we educate, and here it's lawyers, but financiers, accountants, other consultants, from the bottom up, as well as, and this is not to say we shouldn't begin where Neil suggests we begin. I think we should. I think you also have to begin at the bottom. I think we have to inculcate people that the decisions are moral as well. More than once, I've had very prominent people, lawyers in this industry, say to me when a Shari'ah board rejected something, well, change it a little here and put it in a different section. It's totally immoral. And it happens. And it happens all the time. That's totally unacceptable behavior. It just should never come into the picture, something like it. It doesn't happen often. I don't mean to suggest that at all. If it happens once, it's appalling. At any rate, we need to educate people from the bottom up and get a different mindset, infuse morality into the series of judgments. And the lawyers don't get to make decisions on this, but they can report, and their obligation should be to report. So thank you very much. That's the end of my speech.